Good morning, everybody. It's Brian Caprice from Keep Trading Simple. Welcome to our Monday morning market breakdown. So, man, crazy week last week. I always like to start off with a little bit of a week in review, but man, look at that. Last week we had the Fed rate, we had the cut, we got the 0.25 like the market had expected. And what was the reaction? The market was not happy. So if you were in the markets last week, there was a lot of explosion. I mean, it's just craziness everywhere. Um, if you were looking at currency charts last week, you know that for lack of a better word, man, the yen went crazy last week, right? I mean, everything with a yen pair in it just absolutely just blew up and went crazy. Man, just crazy stuff going from July into August. Just bam, fireworks. So going to this week, we have not quite as many news releases, but after the end of last week, I think there's going to be some fireworks this week as well as traders start to come back online. It's still a big vacation week, but less people are on vacation. More people are starting to focus. Again, we're digesting a lot of the things that we saw last week. There's new trade war and, this and that, barbs going back and forth as well. So I think this is going to be an amazing week in trading, and I'm glad that I get to start it off with you guys this week. So before we jump in, let me give you guys a little background about me. For those of you that are new, welcome. I'm very excited that you guys are here. So I'm the president and CEO of Keep Trading Simple, and this kind of helps you understand where I'm coming from in my analysis, but I'm a big believer in keeping it as simple as possible, removing a lot of the distractions that people tell you, the professionals say, oh, you have to have this, you have to have this. I feel that people make things a lot more complicated. So I try to keep things as simple as possible. You guys always hear, go back to the basics, go to the fundamentals. That's what I'm a huge believer in. I've been trading since the tech bubble, so been around for a long time, seen a lot of different market conditions, seen all kinds of tools and strategies and things like that, and kind of help develop my strategy to take this piece here, and this piece here to kind of again keep it as simple as possible. I take care of my daughter. You can see her in the picture now. She's 14 months. She's walking now, so you can tell she's basically everywhere, right? So I'm not one of those traders as well that sits in front of this computer for 16 hours a day. I don't believe that's the way to live. I do absolutely love trading and everything about it, but I do not spend 80% of my day sitting in front of a computer. So what I've done is I've created different programs, 30-minute trader program, 5-minute binary courses that focus on basically being able to use technology and not sitting in front of a computer all day, doing things, going outside, spending time with my family. So I use that kind of stuff all the time. And you notice that inside of my analysis, a lot of if this, then that type trading. I did spend some time in the advisory division of one of the big three banks. So I have gotten a look inside of what happens behind the scenes. I have looked at the big trading floors. I've seen what their mentality is. I also work, I used to work two blocks from the NYC. So I used to, have lunch with traders all the time and actually help teach them how to trade. Again, a lot of cool things. Traveled around, love teaching people how to trade. Obviously, as well, you guys can see, I am definitely very proud of my family, my wife, my two boys. They're twins, actually. They were at lacrosse tryouts all weekend, so it was super busy. And then obviously my daughter, who literally, she's like I don't know, she's definitely daddy's little girl, but she's into everything now. So I keep up with her, and I absolutely love all my time with her. So with that being said, let's jump into the Nadex risk disclaimer. All right, guys. Trading on Nadex involves financial risk and may not be appropriate for all investors. Now, the information presented here today is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. A lot of people forget that Nadex does those. Now, trading can be volatile, okay? Investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures that investors cannot lose more than the cost to enter the transaction. Very important you guys understand that. It's one of the biggest things that I absolutely love about Nadex, especially things like last week when you have rate changes. Absolutely love it. Cannot lose more than you put into the trade, okay? Now, Nadex is subject to U.S. regulatory oversight by the CFTC. Okay, again, if you don't know what the CFTC is, look it up. Very important to understand those guys. A lot of in this day and age, we hear about regulation is bad, regulation is bad. Certain regulation is bad. This is very, very good regulation, and it's amazing that Nadex has it, and it's something that definitely should be respected and appreciated. Okay, so with that being said, let's go into our top 3 of the week. As you guys know, or if you're new here, what I do every week is I break down the 3 biggest news trades that I'm looking at for potential movement. Now, it's not saying that these are going to move, say, 500 pips or, crash the market, but these are great trading opportunities. Set up good risk to reward ratios, and have a high potential to move. No guarantees, obviously, in this. This is just three of the top. This is the top three of the week, and I will actually go through the week and kind of give you the other ones as well. First one is going to be on Friday, 4:30 a.m. Eastern Standard Time. It is early, but it is the pound GDP. Okay, GDP obviously is a very important gauge of what your economy is doing. At that time in the morning, obviously, U.S. traders are not online. There's not really many European numbers at that time. Again, the pound has been in a situation where they're just getting weaker and weaker. May's out, Johnson is in. Unfortunately, our president, I don't think, has sent him his Twitter link yet, but I'm hoping that he gets a Twitter account so we can get some movement all over the place as well. Okay, but again, GDP is a big number, definitely has a high potential for movement on a Friday morning. Next one, Friday morning, a little bit later in the morning, we have the CAD unemployment rate. Now, unemployment rates are one of those things where they can be great or they can be so-so, depending if they're dead on or not. This week, you'll notice that we had a miss in the unemployment rate. The thing about the CAD unemployment rate this week being a high, for me is a high, kind of a high watch list, is that there's not a whole lot of U.S. news at the same time. Friday mornings, normally it's packed with U.S. and Canadian news. The Canadian government is obviously, the Canadian economy is not as big as ours. So sometimes high releases like this by themselves have great movement. Okay, the CAD is one of those things, it doesn't move, and then all of a sudden, bam, it moves. Okay. That's why I think that this is going to be a pretty good potential. The third one, obviously Monday later on today. I didn't put the date on there, but it is obviously the 5th at 10 a.m. I can actually change that because that's going to drive me nuts. Whoops. We're going to put it right there. Whoops, not the 4th. That was yesterday. Going back to the future. All right, the 5th, it's ISM manufacturing, okay, PMI. This is always a big one, all right? Oh, one sec. There we go. All right. I'm trying to see if the cat or baby was pushing in the room. She's not. ISM manufacturing is always good. Manufacturing is important. Anytime you hear manufacturing or PMI, it's important just for the fact that manufacturing is kind of like where we're going. Okay, a lot of numbers are kind of very, very lagging. This is what we did 2 quarters ago, or quarter versus quarter, year versus year. They're back-looking indicators. Anytime we talk about manufacturing or PMI data, that is getting closer and closer to where we are right now about what's going to happen. Okay, now this is non-manufacturing PMI. Okay, so it doesn't necessarily deal with it, but the PMI aspect is what we're looking for right here. Okay, and again, yes, manufacturing is important. If it was manufacturing PMI, good, but non-manufacturing is important as well because it peels that layer out that we also have numbers on. So it's just kind of taking a segment. Again, very, very important number. Okay, that's going to be today. Because Mondays are not typically the largest moving days, this is the only really big group of news that we have here. That's why I feel that it's going to be, again, another high potential mover. All right. Now, one additional release at the bottom. Okay. And again, bonus if you know why for this one. But on Tuesday, New Zealand is actually doing a rate cut. Okay. And the reason why I am adding this up there as a bonus is because if you guys look across, if you're logging into your Nadex platforms and you're going under the currency binary section, you will notice that there is no New Zealand, there is New Zealand currency up there yet. It's not one of the larger traded ones, so it has not been picked up yet by Nadex. But with a cash rate change, you will typically see some reaction also in the Aussie dollar, which is covered with the Aussie yen and the Aussie dollar. So even though this is New Zealand, okay, it tends to have some lasting effects, and that's actually going to be on Tuesday. Where is it? Tuesday at 10 p.m. Oops, I thought I put that in there. I'm sorry. I was so busy about the spacing. There you go. Tuesday, August 6th. There we go. At 10 p.m. Okay. And then again, that is 10 p.m. Eastern. It is supposed to be a rate cut. They're going to go from 1.5 down to what the forecast is 1.25. Okay. And then there's a cash rate statement. But this will have some lasting effects over into the Aussie as well. All right. So that's why I believe that that's going to be kind of one additional bonus news release for the week. All right. So with that being said, let us go and let's look at kind of the week at a glance, okay? All right, so for those of you that are not familiar with this website, when we're done today, go over there, dailyfx.com. This site has absolutely tons and tons and tons of information. Great stuff, great articles, some really cool sentiment charts. If you're not going over there, definitely do yourself justice and get there. Go over here to the charts, calendars and charts, and we're going to go down to the economic indicator. The economic calendar, right? A couple things we want to do in here, and you guys can see right here in your face, there's the ISM non-manufacturing services, high importance, and they're giving you the previous and the forecast. It's supposed to go up. If this is not up, it's going to be a rough day for the markets today, but that happens in 2 hours and 19 minutes, all right? Now, when you're looking for the week, always go over here. If you guys go from the top, just scroll down a little bit, click this button, and go down to the time zone that you live in. I'm in the New York, Santiago, Toronto. Okay. For today's effort, we're going to go over and click filters. I'm going to take low and medium out. I will leave medium in there. Also, I get rid of the Mexican peso. I do leave China. And the reason why is Chinese data will also affect two things. One, the yen, because they're right there. But two, they'll affect the Aussie dollar, okay, the Australian dollar, okay? Again, you'll typically see backlash. Why? Because China buys a lot of resources, natural resources, from Australia. So if things are bad here, it also hurts the outlook over here, and you get some movement, kind of a little extra pointer there, right? So once you click your filter in there, click weekly view, and this will give you kind of your scroll for the week. Again, this is how you make your attack plan, okay? You plan for the week. Again, I don't need to sit here for 18 hours when I can look at this and know when I need to be back at the computer. So as you can see, again, we have this non-manufacturing right here. And then look, we go from 10 my time all the way till tonight with the New Zealand data. Okay, so this is kind of your one and done as far as news goes today for ISM manufacturing. Now, interesting enough, guys, you look in here, look at this pound number, right? Pound data that was better than the forecast. So that's good, because when we start seeing things that are better, now we have to wonder if the GDP number this week is good. Maybe people are too negative. Maybe that GDP number, that number one kind of target for the week, that could be good sign for us. All right. Now going out into Tuesday, you can see obviously cash rate here, cash rate target, no change. Got a little bit of European data. Again, European data is good. We've heard that the European kind of economy right now is starting to soften. Always good when we can get a little bit in there. Now it's factory orders. Again, factory orders, construction. That's kind of where we go next. If they're not building things, they have some type of insight that, hey, if we're not building things, we're doing that because we don't think people are going to be buying things. That's kind of an acceptance of weakness, which is nice. Okay, now here's that cash rate that I talked about again tomorrow. New Zealand, this will affect the Aussie, which is Nadex tradable. Again, it is 1.5 and it comes across to 1.25. Okay, going into Wednesday, you'll see Wednesday's pretty light, right? Now, remember I mentioned commodities? If you guys are not, I'm not going to talk about commodities today because we're a couple days out, but if you're not trading commodities, if you are trading commodities or you always thought it'd be great to trade oil, guess what? If you trade it in futures, man, it can get expensive and it can get you quick, right? But a great way to trade it as well, especially to learn, is to go over here and trade crude oil inventories, okay? Every single week, typically Wednesday, if not on Thursday, you'll have crude oil inventory, right? Well, it comes up as a medium, obviously, for currencies-based things. But again, if you're going to trade commodities, go down to the commodities tab on the left. You guys will see it over there on your workspace for Nadex and trade it, okay? Use your same technical analysis. If you're a technical analysis and your strategies are good, they will also work on crude oil, okay? If you're a supply and demand trader or price action trader like me, they work, okay? Crude oil is a great little one to trade. Now, going into Thursday, because you can see Wednesday, pretty shy. Wednesday, kind of the same thing. We have initial jobless claims and continuous claims early in the morning. And again, with nothing else going on, this could be what the news gravitates towards. You see your CNBCs and your MSNBCs. If they don't have anything else, they will gravitate towards lower. Again, when you're talking about jobless claims, this could be something, talking about the economy, okay? So there's a little potential there. And again, you'll see kind of shy for the rest of the week, right? Going into Friday, okay, you'll see some Chinese news to start. And again, here's that kind of, look at this. Look at all this data. All this data in here. Again, here's the GDP. That's obviously the highest one. And again, it is expected to be lower than what the previous was. But if we're starting to get positive numbers, maybe they're a little bit too negative, okay? So if the market has factored in a 1.4, this comes in at 1.6 or maybe a 1.8, what it was previously, that could be a nice mover. I'm excited about that, okay? Now, again, we have a lot of GDP numbers. We have industrial production in here as well. We have manufacturing production. Again, it was nothing before, and they're expected to be negative. What if it's not? What if these come as a surprise? Again, movement, as well as some trade balances. Then we go down, and again, you guys can see, typically this 8:30 time period here, this is normally a joint release time with the CAD and the US. It's just Canadian dollar. Okay, and that's where you're going to see your unemployment rate. So again, Friday, make sure you have an alarm set. Make sure you're awake for this 8:30 trading period. Get in here and trade these things, okay? And again, we have the Baker Hughes. Again, we have that every single week as well. So that's how it kind of laid out this week. It's definitely a much more of a strategic week than what we normally have. But again, that's not a bad thing. Again, we can get some good movement. You guys can see oil's back down to this 55 number again, 55 flat. And again, it's red for the day already. So oil could be dropping in there, get in and trade that commodities. And again, gold's back down to, 14.59. So Interesting. So again, if you guys are not on this website, absolutely love it. Get in there, play around. A lot of things you can do over here. All right. So we'll drag this one out and let's go right into charts. So you guys should be able to see some charts over here. Now I have a bunch of different charts up. I actually do sessions with my students every evening, so you guys will see some things up here if it gets a little bit busy. It's just because I use the same charts. They've really gotten into the IG charts. If you guys are not on IG and you're looking for a charting platform as well, do yourself a favor, go over and check out IG. I started using IG. I was using NinjaTrade, if you guys know. I started using this a few weeks ago. Absolutely loving it. Very, very easy. Every day I'm finding another bell or whistle in here that I didn't know existed before, whether it be a shortcut or, adding something on. Definitely like it. Very easy to use. So I'll be using that from now on. So you'll see some lines. So look at this one. You guys can see here. Obviously, this is more yen based than anything else, but you can see this pair has just collapsed. This gigantic move here was when the yen just absolutely went crazy, gained a lot of strength. Last week, right? Last week was what, the 29th? Okay, you can see the 29th is right here. We had broken below this kind of what I call the kind of blue magnet area, right? We kept getting sucked back into the same zone, okay? And again, it would pop out, but then pull back in, and then go down and then pull back again. We finally broke on that area. And last week, we were talking about looking at this kind of level here, right? We were trying to see, can we break below the lows? Would we be able to get through there? And we we went here. This was bringing us into Wednesday. We still had not broken out. It was grinding. It was slow, small bodies, and then all of a sudden, wham, this thing just cracked. This is when the FOMC, and again, this is that yen reaction that you're talking about. And we just blew through the bottom, right? Yen went down. It was definitely kind of a tradable event. We had some retraces. Where we are now, okay, so I'm going to kind of scroll back. So this one candle, you guys see this one kind of crazy candle? This was Wednesday, January 2nd. This yen candle gave us this huge wick to the bottom. Every currency pair that had the yen involved in it did the same thing. It shot all the way down and pulled all the way back up again. When you're talking about price action, obviously it's a very hard scenario. Why? Because it's hard to read. The body's all the way up here. This was literally a spike down and a spike back up again. It's very, very fast. Well, that was kind of all the way down here at 71.21. Well, we're about 60 pips above that. Okay, we were within striking distance of that bottom. The reason I'm telling you is because right now price action is a bit difficult because we're all the way at the bottom. Price is not pulling back. We are obviously in a downtrend. And remember, you don't want to be the guy that catches the falling knife, right? Get it on a pullback. Getting it on a pullback for a short is much safer than trying to jump onto it when it's at the bottom. That's how you end up buying it, right? That's how you end up selling it at the bottom and buying it at the very, very top is trying to jump in after these large moves. So you need to wait for pullbacks. No pullbacks. But with that said, this gray line, hopefully you guys can see this gray line, that's where price is currently. And you can see that price went all the way down here, and I will actually put a little red kind of bar so we can track it back. Let's go all the way back. Do you see what happened right here? Look at where price went to. So it went all the way down here, and the reason I'm pointing this out is because this is an area that's going to be very, very popular to trap bears. Okay, so be very, very cautious of that. Price is now pulled up, and it's about here. But we were all the way down here to 71.36 within striking distance. We were within 9 pips of being at this low. Okay, definitely be very, very cautious. Now, like I said, I'm waiting for a pullback. Have not gotten it. You guys can see the red line over here. It kind of came touch and is kind of meandered slowly sideways. And again, on the 5 minute. Oh, let me bring this up to 30. You guys can see on a 30 minute, same thing. We touched this area and then just have kind of stopped. Okay, from the pullback, we've just gone sideways. So got to wait for some traders to get on this one. We've got to see some movement again. I'm really on this one. I'm just waiting for us to kind of get either a pullback or kind of see if we can get a really nice base. This is a nice little kind of continuation area here, but right now, a little bit on pause. I'm waiting for a pullback to see if we can break lower. If not, I'm looking for some type of a trend reversal signal. Do not have it yet, although if we start driving up on the 4 hour, we may starting to be entering it. All right, so going across to Aussie dollar, I'm going to skip Aussie New Zealand because we don't cover that one with Nadex. And you guys can see, same situation, came all the way down. Now, this one also has not had any type of pullback. We broke prior lows, and you guys can see this is kind of what I'm talking about, bear trap, right? Here is the low. Support and resistance traders are going to jump all over this. All over it. They're going to say, as soon as we break, we're going to short. And what happened? Yeah, they did. They shorted, and it immediately shot back up again and then collapsed through, taking their stop losses out. So there has been some entries. Okay, we've had some momentum breakout trades in this pair. But we're kind of at the same situation. We are pulling down. We've had some pullbacks. This one is not as nice right now, chart-wise, because you guys see all these wicks. These are big wicks. So there are definitely some buyers kind of flaunting, tickling the bottom, right? It's tickling and the price is running away from it. And again, you'll see kind of starting to get a little bit of a base here. Let's see. If this price can continue to rally up and break this zone here and this zone here, that's a short-term reversal for me. So I'm going to start looking for things to go long in this one. Again, we did bounce off that bottom section and price immediately shot away. So very similar kind of setup with this one. All right. Again, just be cautious with the Aussie. Again, this is anything with gold or inflation that has the ability to kind of move these pairs around. Now, looking into the euro pound. So, euro pound. There is two levels, and with these two purple levels up top are signifying for me are larger time frame selling zones. Okay. Now, typically, when you have a level on top of a level, this kind of stacking situation, we tend to stay with the more conservative on the top side. Okay. Now, I was talking with my students last week about taking shorts off of this position just because the entry was so sharp in and we had a bit of a retraces. Now, it went back to where we kind of assumed it was. We were going to try to play this on more of a swing type trade. I'm still probably in the same situation. Again, we had some positive news for the pound today. When U.S. traders come online, they'll be able to react to that as well. Again, anytime you're talking about larger time frame selling zones, again, you always have to be going with what you see. Okay. It's not predicting the future, but it's preparing for what could happen. And again, when you get that type of an entry, and we did have a pullback down. It did hit the profit target of where we thought. Again, we were looking for this kind of basing level here. We knew if price was basing, there was some buying orders sitting in here, right? There was something going on as price tried to push back down. It got pushed higher, and that's what drove it up. There was profit target 1. Profit target 2 is down here. So I'm waiting for a second entry to be able to get into this one, but definitely a little bit more kind of, bearish on the euro and a little bit more bullish on the pound. Okay, and then again, the news today was good for the pound, and we'll see where that one goes. Targets, I'm looking to take this back down to kind of the basing level here, where this kind of, you'll see this little kind of this pop and then the sideways movement before it popped again. I'm looking down at the 89, 70-ish area approximately. A lot of this will depend on where we get the signal to get short. And again, we do not have it right now. Do not go blindly into this one just saying, hey, Brian said this. It's not there. It hasn't triggered yet. Again, this is a little bit of the waiting game. Okay, there are ways to use technology with alerts. By the way, if you do not know how to set alerts on your platform, one of the things I do like about this, and it is helpful, see this alert button up here on the right-hand corner? Hit the alert button, and again, you can use indicator or price, but just do price level. You can punch that level in there, and you'll get a tab over here where it'll give you an alert, and it'll show you all your price level alerts, okay? It'll show you. If you have the app on your phone as well, it will actually send it to your phone. So definitely very, very cool to use technology like this. I was very impressed that they had that capability, all right? So jumping over to the euro yen. Give that a second to load. All right, so into the euro yen. Same similar reaction again, all yen pairs. Remember the Aussie yen? We had this big push down. Same situation. This is the euro yen. Now, euro yen did kind of the same thing. This one actually did break below before it retraced. Now, this also had a bit more of a retracement as well. So right now, it's an interesting situation. It has pulled back to areas where we do have basing. You guys can see that there's this wick right here against this large, large candle, okay? This was what we call a racetrack. We typically expect somewhat of a retrace. But on the 4-hour, it did give us some zones to the downside. We had a zone here. We had a little zone here, a little zone here. The zone we're at right now, I wouldn't classify as being the best. And here's why, okay? Price drove up, and again, I'll make it a little bit bigger. Price drove up and back. It went higher and back. And it went higher and back. So this basing zone right here really isn't important to me. I'm still kind of focused on this zone right there. Okay, so if price is able to pull back in there, I'm probably a lot more likely to take a short on this one. Again, the risk on that one, you guys can see it does paint on multiple time frames, which is nice. If you guys take the risk level on this one, you guys can see it's about 38 pips, but we can actually make that smaller even on the 30-minute. Okay, 38 pips is a little bit much for my personal preferences, but there are ways that we can actually probably shorten this. Let's see, we can pull this up into there. Probably have to be safe there, and then this would also kind of bunch back up again. You're in the 20 range now. Okay, so definitely ways. Want to see how it enters the area, but definitely a way to kind of jump into this to see if we can push lower. Okay, now if we do start to break this area at the top side, again, I'm going to be looking to take this long back up to the start of the move, back up here at 120.83. We'll see what happens as we approach this area. Again, that area for those of you that are charting is basically 119. 119 is right there. So yeah, so 119 up to 119.22, about a 20 pip zone is what you're looking for. That's set an alert when we get to that area. That could be an area that we're going to see what kind of how this is formed to the top side. If we're basing below, we're not going to look to go short. If it goes straight up, then we would be looking to go short. So it's kind of a call when we get to there. So set an alert for that. Jumping into the euro dollar. Euro dollar, I do expect some movement today at the 10 a.m. mark. You can see this euro dollar has really, really retraced. We had that racetrack to the downside. And again, this was a draw that we did last week if we were going to kind of flaunt with this area. And it did. It went about 75% of the way down. We would have been out at this black mark right here. That's what we talked about last week. And again, we talked about potentially getting into a re-entry, but we didn't get a signal. Okay, we were looking for a signal below this yellow bar and this yellow line here. Did not get it. Okay, now we did push back up, and this yellow line here was an alert for us. We wanted to know when we hit it, and we wanted to see what was going to happen. And again, it based, it hit once, it hit twice, and number 3, it finally burst through. So again, it was pushing to the top side. What we're looking for price to do is rally back up at this point up to the 112.06 area. Where price is right now, it's about 25 pips above where we are. It would be nice in the next, 2 hours if we can get price to rally. It may be a little bit hard for it to do it, but if we can get pretty close or, again, looking for some type of a price spike into that area, particularly with news, we'd be looking to take a retrace. Again, right now, European traders are online, and what they're doing is they're basically, they're forcing the dollar down. Okay, they're making the dollar weaker right now. They want weak dollar, and they're creating strong euro. When American traders or U.S. trader-based traders get online, they will step in and then start to determine what's going to happen with the dollar. Again, if it's been nothing but straight up, we get good U.S. numbers. Again, Europe leaves the market, the dollar traders can force this trade all the way back down to retrace. So that's kind of what I'm looking for right now. Again, there's this daily basing level, and again, that's what we're seeing here on the smaller time frame. Again, this is also why this is important. You guys see this as a trigger. You don't go in blind. You see how price is forming. There's a nice little level here, but again, this is your first pop, this is your second, and then here's your third, and then the fourth, is what would rally through it. So that's why alerts are important. Okay, I do love set and forgets, but on the smaller time frames, I love the alerts to see what's forming beforehand. Okay, jumping across to pound yen. You will also see the same kind of chart reaction. Look, all these little candles, and what do we see? Huge, huge, huge yen, right? This was the yen again. And again, you guys can see we took entry off here at the arrow. Price dropped back down again, ended up hitting our full profit target. There was a chance to get in second, although we missed it. I missed it personally just by a little tiny bit. You guys can see this little, you make it a little bit bigger. You guys see this little area? Missed the second entry to add on to a position. Where we are now, okay, same situation that we saw with the other spikes, okay? Difference is this one is all the way down here, okay? So our analysis now has changed. And one of the things that's interesting, I don't use weeklies too much, but going back, we're talking about going back and reading price from November 2016. Okay, price is right here at 129.02. The last time the price was here, again, 2016, and it spent a lot of time down here, okay? We're talking about really all of, October 6th through November 8th. So it spent an entire month down in this 129 range. Makes it a pretty interesting situation, okay? And again, where we are right now with everything, it could be an interesting kind of setup. And again, the price is based here previously in the past. So we know that there's obviously some buyers down there that drove price or kept price from going lower. With GDP numbers, we do have a little bit more certainty with Boris Johnson in there. This could be the potential area. Again, I say could. If the numbers are positive this week and then we go into that Friday GDP number, this could be an interesting kind of takeoff point. So definitely something I'm kind of monitoring and looking. Again, we have had some entries to continue on the downside on this one, which we did not have in the Aussie yen or the Euro yen. So been a little bit different. Right now, again, we're basing sideways. We're not really seeing, again, a little bit of retrace. This is a level of basing from, basically from Friday morning all the way into Sunday. It's expected. For me, I'm not gonna mess with this level. I'm gonna wait till price comes back up into this 130.29. That's the last area. We've had one touch here. This one didn't quite make it. That's the one that I talked about missing. Again, if we come back up again, this could be a potential short for me. The risk on it is rather small, but again, there are Nadex contracts right around this area that are actually pretty attractive. Okay, so definitely look for that. Going across and looking at pound dollar. Now you'll notice pound dollar it has a big move, but it's on a different day. Okay, the yen move happened here. Okay, this is a different day. This is when Boris Johnson kind of stepped in. So you'll see this one again. We talked about the blue area of kind of magnetism. That's what happened here. You guys will see. We kind of came into this area and then just spent time going sideways, right? Really didn't do much. Here's Thursday. This little chart, this candle right here. That's the day that the yen went crazy. And you'll notice it didn't go crazy here because the yen is not involved with this pair. Okay, so it wasn't a pound move. It was a yen move. You'll see we basically went sideways. And we've been stuck. And again, inside this 4-hour window, we kind of entered this area last night and just have stopped. Okay. So what I'm looking for is I'm looking for some type of realistic breakout. Now below between, let's see, 120.30 and 119.80, there's this 20 pip kind of buying area. Again, this is also a way back number. Again, prices haven't been this low for a while. This data figure comes from here, which is March of 2017. Last time we had some buyers that prevented this from going lower and stepped in. So that's kind of what we're coming off of, and that's just below where we are. Okay, so I don't know if people are front running right now, but again, we broke through and pulled back. And again, you guys can see we've just literally been stuck inside of this blue area. So for me, this is really considered. I mean, it is, yes, I would say it is a downtrend setup, right? We are in a downtrend. We do have green. It is pulling back. But then when you look on this time frame over here, let's make this bigger. When you look at this time frame, is this really a pullback or are we just kind of basing right now? Really just basing sideways. So it's not the pullback like I would like. I would like a little bit stronger of a, we need more orders, and this is just kind of meandering sideways. So not really the kind of setup that I'm looking for. All right, in this one. Okay, so again, I'm gonna wait till U.S. traders get online. Again, important thing to understand: if the U.S. traders come online and try to bring dollar strength back into the market to counter the European traders that are giving us euro strength, because of the dollar strength, that will also affect this pair, and that will drive this thing down. And again, that may drop us into this area. If we look for a reversal pattern hitting this area, that could be our opportunity to go long. So this magnet area obviously is eaten up. Just keep that on your radar. If the U.S. traders fight the euro, it's going to affect this pair, okay, the same way. Dropping over, let's look at dollar CAD. That would be the next one down on the list. So as I mentioned before, dollar CAD later in the week, it would be, again, dollar CAD will come in today with ISM manufacturing because obviously the dollar is associated with it. But later in the week for the CAD unemployment on Friday, it will also have something. All right. So we have this little basing area in the daily. Okay. Price, once it hit it, it also just kind of flatlined and stopped. Okay. We were looking to get some type of an entry to the top side if we got a clean one, which we haven't really gotten yet. Have not triggered. This was something that we had talked about last Thursday night as being our potential trade setup. It didn't trigger on Friday for us, but it's still something that we're holding on to. We're looking at this area, okay? Now, price is driven back deep in the area, but it's really basically just gone sideways. It's gone up, down. I mean, you guys can see. Came up the top, sucked back in, kind of made a little bit higher of a attempt and kind of sucked back in. Over here was doing the exact opposite. Down, up, down, up, down, up. And again, kind of that same level of magnetism that it's just pulling back into this 132 range. And it's 132 as the low side up to 132.28. Okay, so it's really it's pulling it in there. It's a sideways trend right now. It's stopped. It hasn't turned. It hasn't gone through the top. So we need to figure out which direction it's going to head in before we take any type of trade. If we can get a confirmation on the top, I'm looking for a target really up here, right where we had this kind of flip, this kind of rollover. Again, front running a little bit at 133.66. To the downside, we've already kind of grabbed the orders once. Yeah, this was an area we were looking to get in long for. It hit and kind of went to the top side. We're kind of wedged right now, right? We need to get some trend. Let's get U.S. traders in there. Let's get Canadian traders in there and start throwing this back and forth and see if we can get some trend. I'll be looking for news trades on this one this week. I'm actually kind of a fan of where we are up top. I do love this racetrack and the fact that it kind of hit something here and flipped. Again, that could be that could be the pressure to get us back down to the 130 area. Okay. Dropping down to dollar Swiss. Okay. Dollar Swiss last week was a little bit surprising. Okay, you would think that there's not, but again, I say you think it's going to be surprising, but then we had this explosion through the top. So we had kind of a selling area here, and this gave us a little bit of a fake out, right? It hit, it came back down. It did grab kind of the profit target they were looking for, but we didn't make the second entry on it. It kind of gave us a signal that it was going to break through and then just collapsed, kind of in an area of nowhere. we were looking to sell back here, but look at this thing. This had some movement last week. Now, North Korea doing missile tests, yeah, that kind of, will affect this pair a bit. So again, after, kind of digesting the news a bit, I understand why it did what it did. Now, just for the overall trading for this week, again, we can't plan on missile testing or anything like that. It is getting close down to this, the bottom level. If we're looking at somewhat of a curve, and again, I show it. I've shown it in the past. I'm not going to show it now, but you guys can use your fib tools for more than just fibs. If you're looking for kind of what the kind of propensity of a kind of currency pair would be to do, again, if you're taking near time lows and highs, you can divide the fibs up into 33% brackets, right? Top 33%, you're looking to short. Bottom 33%, you're looking to go long. As you can see, when it came here, if you're using this as your near-term high and this is your near-time low, when price got in the top 33%, it dropped back down in the middle. Went back in the top 33% again, it dropped down. So we are now in the bottom 33% of this area, a little bit more bearish, right? Need to find an area, again, haven't really seen it. You guys can see there's a pullback here. This actually should have been a little bit lower. That's based off of this, but didn't quite get entered, but it was very, very close. And again, we've driven down. Looking for any type of a pullback, but at the first sign of a reversal, we'll be looking for where the basing level is to establish low risk. And again, see if we can get this pair back up into this 198.75-ish area, okay? All right, last but not least, dollar yen. Okay, obviously a yen-based pair as well. And you guys will see the same type of market reaction. Pull the ATR off. You guys can see same type of huge reaction. Okay. Now, this huge reaction is definitely something that you guys could have got involved in. We've been talking about this selling zone for a while, right? This is on the daily. Price came up and it actually just tickled the very, very top. It literally it went like 5-6 pips into the zone. I think we measured it off. Actually, I'm sorry. This one went, it's not 14. It went, let's see. It went, 9 pips. Sorry, it wasn't 6. It was 9. 9 pips into the zone, and then look at this kind of drop. It just pushed right through. Again, you guys can see very, very tiny risk. This was basically, this is your daily. That's what triggered it. And then here was a pullback opportunity, even on the 30 minutes, but it just went straight down and collapsed. Again, kind of similar to what the overall stock market did. So this is also pulling back, and we need to adjust some of these targets. So this was a prior target zone, and it hit and pulled back again. So right now, this prior, let me bring this over to here just to get out of the way, because that was what our target was. Now what we're doing is we're looking for some basing. So I am looking at kind of this area is my first kind of bit of retracement, right? As area pulls back, you can see it based. Now, the one caveat about this base, as you guys will see, this was Friday afternoon into Sunday evening. I typically don't like to focus on zones during that time frame because there are no traders there. Okay, after about 11, 12 o'clock, all that just, all the traders just kind of get sucked out, okay? So that's why we saw this basing, and then again, Sunday night came in, and that's where the movement and retrace came in. There were people trading this last night, but again, right now we need U.S. traders to come online. We got to see what the news looks like. We got to see what manufacturing looks like. I'd be cautious with this one because if we start off strong, right, if the U.S. market is going up this morning, again, rebounding off of what we had last week, and that ISM non-manufacturing PMI number is bad, that could be the reversal because it is at that 10 o'clock magic number. Okay, 10, 10:30, those are the magic reversal times. So, just keep that in mind in this pair. And again, if it does come up into this level or we're a little bit close to this 106.50, again, 106.50 is one of those, the round numbers. So again, keep that in mind. But if we do get any type of spike, look for reversal to the downside. As you can see, this one has not cleared that candle. Again, same yen candle. We're at 106.18. The bottom of that one is at 104.76. So there is plenty of room for this one still to go to the downside inside of that kind of mega wick, as well as if we get any type of reversal, we have some ground to kind of reestablish before we can get back up into the 109.22 range. So, we're about 300 pips below that right now. So this was an absolutely huge mover last week. Off that daily one that we had set up last Monday, you guys can see that was 148 pips to the downside on a daily. And again, that happened within 12 hours. On a daily, that was eight strike prices to the downside. Okay, that was an absolutely huge Nadex move last week. Okay, had you been able to kind of take advantage of that. And again, that's why these long-term, these larger time frame zones, they're nice. All right, guys. So with that being said, that is the final bit. That's all we got for the actual charts. Let's bring this across. If you guys have any questions about anything that I said, you're more than welcome to reach out to me. There's a couple different ways to reach me. You can check out the website, keeptradingsimple.com. On Instagram, we are keep.trading.simple. I show different chart setups to help educate you guys online. We are on Facebook. We do Twitch broadcasts every evening at 9 p.m. Eastern. Twitch.tv, Keep Trading Simple. Here's our Discord channel. If you guys want to write this down real quick, it is our chat room. It is free. You're more than welcome to go in there and chat back and forth with our traders, and I am in there. You can ask questions, or we can use the good old-fashioned snail email, right? I do check this regularly. It is attached to my phone. I try to answer as soon as I see them. Support@keeptradingsimple.com. Thank you guys so much for joining us. I hope you guys will join us next week, same time, same channel. Take care and have a good week trading.